this particular highlights about and right after the Fed statement on FOMC day. What's really important when you enter volatile markets that you're going to get after big numbers and after a statement is you got to focus on the consolidation boxes, as we call them, and know that it's important to stay careful and almost not long below what's defined as the bottom of the box or short what's defined as the top of the box. Then put yourself in a position to find a moment where you could catch this short with some effortlessness where it goes your way, stays your way. All right. So first of all, if you're not understanding and being able to visualize when you read a chart, what I've highlighted, that's got to be your step one. You got to get better at knowing the tops and the bottoms of recent consolidation. All right. That's where the other side are going to do two things. They're going to want to get out of their shorts up here, and they might chase it, often do, or out of their longs, chase it, which they often do down here. Also, you start to accumulate dummies who look to get long in here or short up here because they see how well it worked over there and how well it was support over there. They're using something that's already worked as confirmation, and that should be opposite. Trading and good trading, consistent trading is generally opposite of conventional wisdom. Conventional wisdom says, hey, it's confirming support. That's when you want to use it as a breakout. All right. There's many people that might watch my YouTube videos or come in this room. Still, overwhelmingly amount of the people are never going to click to that, grab onto that concept. So we're in good shape. It's not like some secret because most people will not attach themselves to it. And there'll always be retail dummies that get in and go through the revolving door of donating. So they don't recognize things that are otherwise simple to people who know what they're doing. So right in here, if you're trying to get short below that area and below that box, which is around 52, 54, there's some interesting things like in our OPP, which means I want to see every last little Johnny getting stuck long. So he goes crying home to mommy, and we took his dinner. We took his lunch money. You're not going to allow him to eat, and we're not going to feel bad for him either. We're in a society where everybody is worried about hurting everybody else's feelings. Not in here. Nope. We hurt people's feelings. We want people's feelings to get hurt. And that's people donating. That's people being stuck long as it starts to capitulate to the downside. And now they're chasing it. All right. So we get longs that accumulate, and they show it in the tool that we have. You see this green line getting bigger. You could see the inflection before it started really to cook to the downside. This blue, first of all, this blue rectangle up here is a big buy market order. Boom, rejected. Comes back up, uses them as resistance. You can see our green line go from small to bigger, which means little Johnnies are getting involved and they're getting long. God bless them. Look at them. And you could see it in this number right in here. As this one grows, this one shrinks, and that spread widens. The last kind of a attempt as a baby bird to let them get out. Let me get out. Wham. And watch this number. That's where your first opportunities close to after a big economic number release, like a CPI or jobs number, or the FOMC meetings and statements and press conferences, especially the statement because it comes out 1 o'clock Central on the button every 6 weeks. So you don't have to be active and be in there trading and everything else, but you should be able to understand what's expected, what the statement was there any dovish or hawkishness within that statement, be able to translate it quickly into where the market should go and why, or why the market's going in a timely fashion. If you find yourself asking why a lot, it's because you're missing something. You're missing the answers to that why questions. And most people don't say why. They want the what and the how. Show me how to do it. Show me how price. No, why does price move? And it has everything to do with how other people are thinking and executing, not you. Stop thinking about what you're thinking about. Stop thinking about what you're doing and think about what the market's doing as a collective. When the market's too long, it's bearish. When the market's too short, it's bullish.